The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hello and welcome to the COB. I'm Juliette Sully. We've got a bit of a Friday feeling, even though of course it's only Wednesday, but markets will be closed tomorrow. We've kind of ended the day, I guess, a little bit flat today, given that we had that inflation print coming through. As you can see, pretty much bang on 11:30, there was a bit of selling because it was hotter than expected. We're now starting to reprice out when we might see rate cuts from the RBA. A little bit more buying coming through in those so-called lunchtime hours, and then we've ended fairly flat there on the CBO 200. The ASX 200, just give you a read of where that is closing out the day's trade, up 8 points or 0.1%, 7,691, and that's after we had a pretty positive start to the day's trade. As you can see reflected there on that chart, it did look like we were going to have a good day. We continued to see sort of the repricing on global equity markets too from that Friday risk-off sentiment, but certainly I guess just a bit of a muted session by the end of the day's trade, and maybe as well, given that it's a public holiday tomorrow, everybody just wants to stay on the sidelines somewhat. Certainly volumes low. You can hardly see anyone in the city at the moment. Let's have a look at the three themes though. As I mentioned, that sticky inflation, so 3.6% annual rate there, above what the market was looking for, and really just adding to those concerns of when we might actually see inflation get to that 2 to 3% band that the RBA wants. And of course, when we are going to start to see cuts coming through from the RBA now, potentially not even at all in 2024, according to some. And Paul Bloxham from HSBC was saying you can't rule out either the fact that you could actually see a rate hike. The Aussie did spike though on, of course, all those repricing bets there as well, and it was back above 65 cents. And then an interesting one as well in terms of a potential crackdown here on the big tech aspect, because the US Senate has voted to send legislation to President Biden that would require Chinese owner ByteDance to divest TikTok's US operations within about a 9-month period or face a ban. The measure has been passed by the US House of Representatives, and it's been driven by concerns that China could access Americans' data or surveil them with the app. And Biden has said he'll sign it into law on Wednesday. So of course, watching very closely the ramifications to global tech players too. Quick look at our sectors before we get to our guest. Having a look at the banks today. Actually, let's start with utilities. Cleanaway in focus. I'll get to that story in a moment. Origin, AGL, Genesis, all under pressure. The utility sector, certainly, of course, that interest rate sensitive sector under pressure today. When it comes to the banks, they're all looking really good, apart from Macquarie down 0.5%. But the big four certainly have not been dented at all this week by that broker call that we had coming through from Citi. Next, I think, might be those miners that I was waiting for. There we go. BHP, Rio, Fortescue looking okay today on its quarterly update. South 32 down 0.5%. And some of the energy players as well. Santos, Woodside, Paladin, Boss, all looking pretty solid. Quick look at some of the stories we followed. Kogan reported a near 14% rise in quarterly gross profit to $39 million. Its share price, though, being hit very hard today, down 26%. Perseus Mining saw its quarterly average gold sales price increase 3% quarter on quarter, shares up by 1.4%. Linus posted a drop in quarterly sales revenue to $101.2 million, missing estimates. Perpetual saw a 6% increase in assets under management. And Cleanaway there rebutting calls that it's had a takeover offer from Seven Group Holdings. All right, let's get straight to our guest and welcome to the COB, Mark Gardner from MPC Markets. Hi, Mark.
Good afternoon.
Again, coming back. Thanks so much. So sticky inflation, kind of cooling that market rally somewhat.
Yeah, so look, obviously we saw a sell-off immediately, straight after the number, and then obviously we bounced a little bit in, just after lunch, and then it's just drifted off into the close, which is probably to be expected given you've got Meta, Google, Microsoft all reporting over the next couple of days, advanced GDP in the States as well Thursday night, so we won't be reopening until then on Friday morning. So, there's a fair bit of market risk out there, I suppose, in terms of, I wouldn't imagine you'd be really enthusiastic in buying heavily into this break. So yeah, I'm not really surprised to see it drift off into the afternoon. I think we've actually survived relatively well compared to some of the bond market movements were quite severe, I believe, 10 to 20 basis points being in the futures, some of the bond futures being added to the yield. So yeah.
Certainly it was really repricing out rate cuts anytime soon.
Yeah, look, the average between cycles is normally around that 500 days, which puts it in well into the fourth quarter of this year. Those historical averages are, they hold up for a reason, realistically. The economy doesn't work as fast as what markets, expect them to overall. And then we particularly in the last few years, we've really seen the market gets way ahead of itself and then has to reprice, and then it probably ends up somewhere in the middle, across time. I think that, calls for rate hikes is just merely economists trying to get their name in the headlines, to be honest. So I think all it does is realistically push the rate cuts back. If anything, maybe the States, and it's a very large long shot, if there was another surge in inflation, we may see one more there, but I highly doubt that as well, to be honest. I think we're just probably going nowhere for a while, and equity markets may need to readjust. But we've had that US 2-year bumping along at 5% for nearly a week and a half to 2 weeks now, and it's failed to go through. So maybe the GDP numbers and the PCE might push it through. If that doesn't, I would say, we're probably in for fairly quiet markets for 3 to 4 weeks.
Oh, well, that old sell in May, potentially. Now, you mentioned Meta. We've got Microsoft, Google coming through later in the week as well. I was just talking about that potential TikTok ban. Just tell us more broadly about the tech picture.
Look, there's a lot of really good news priced in. Meta and Google. I mean, Google's really shot themselves in the foot multiple times through their AI launch, but realistically, them and Meta probably should have the box seat with the most amount of probably user data and just general data for the use in AI. So it'll be interesting to see with Meta particularly how that flows through into any potential increase in ad spend. But we've obviously had a lot of this extreme company spending for the likes of the NVIDIA chips and things like that. There usually is a settling period where the 6 to 12 months before the revenue even starts to come through once that infrastructure's set up. So we could have a bit of a rocky period overall. Microsoft, I mean, it's on everyone's desktop. I think they've probably got one of the easiest paths for just day-to-day AI, and obviously with OpenAI, they've had a little bit of a head start, but it's been relatively quiet from them. There hasn't been any major announcements, so it'll just be interesting to see whether the market's super disappointed that there's the revenue they're expecting hasn't come, or whether it actually this AI thing is happening as fast as everyone thinks it's happening. So yeah, it'll be really interesting to see. And then we've got the oil companies on Friday night as well. So it's about 22% of the market cap of the S&P 500 in the next 3 days. So yeah, Tesla this morning.
Bit of a fizzer.
Well, yeah, it was, but 13% bounce. But if you actually have a look at the chart, it's like that much on a downtrend of huge. So while it made for good headlines, it's another Elon special where he's suggesting really blue sky things happening and no timelines or very very ambiguous timelines, etc. So he's been I think he's promised the robo taxis like 4 times now. So but overall I think their inventories rose by 80-odd%. And their margins were slightly better than expected, but still compressing. So it's not great from a company aspect.
Well, let's look ahead past the US PCE and I guess what's on the radar in the next couple of weeks, because you said it could be a sense of potentially people just staying away a little bit.
Yeah, it could be. And look, even if these earnings come in as expected, so far this earnings season, anything that we've had a string of companies that have beaten have been hammered. So Tesla's the only one that it's sort of been the reverse. They expected it to be bad, and it got a small bounce. But it's really early days in terms of there's what the analyst expects, but there's also what the market expectations really. And I think the market is really got their fingers and toes crossed for, really strong beats from those Mag 7. Well, everyone's trying to now make it the Big 6 or whatever it is. So it'll be pretty important to see. But if even if we just get bang on expectation and then we get bang on expectation with the inflation data, without any further catalyst for us to go higher, we might start to see investors get a little bit impatient and maybe starting to sell off a little bit. So pretty key technical levels for the Nasdaq. I think it bounced off the 100-day moving average recently as well. So it'll be interesting over the next month. And we're sort of we're fairly cashed up at the moment and looking at opportunities as they come up and where they're going to come up. We're a little bit uncertain at the moment, so it's a wait and see attitude for us.
All right. Well, Mark, thank you, and all of the guys at MPC helping us out today. Mark Gardner from MPC Markets. I spoke to Jonathan. I spoke to Kai. Great to have them all with us. Well, the stock of the day today was Fortescue. Gary Glover from Novus Capital and Jason McIntosh from Motion Trader went in depth and stock specific on the call with Koshi.
Long Fortescue at the moment, I'd give it a couple more dollars. If I wasn't in, I wouldn't be buying it. I wouldn't be buying this dip at the moment with the iron ore where it is. The market's generally a little bit in corrective mode at the moment. There's not a hurry to buy it.
Yeah.
But yeah, if I had it, it's only got a little bit more runway before I've probably got to move it on and just protect capital.
Okay.
Generally, high inflation environments sort of commodities remain pretty firm. So probably a bit of a hold here, probably a bit of a sideways, but it's really sort of sitting in the middle of nowhere for me. So I'm like Jason now. If I had it, I'd probably hold it. But if I wasn't in there, which I'm not, I wouldn't be jumping in either.
All right, the market has closed for the day and ahead of the Anzac Day break. Let's have a look at the leaders of the day. Fisher & Paykel had a nice day, up 5%, as did Regis Resources in the gold space. Block looking good, Telix Pharmaceuticals and Light & Wonder all in the black. To the downside today, Chalice Mining off by almost 10%. Perpetual, we talked about its update to the market. Homeco in the REIT space, Luca Resources and Lifestyle Communities also lagging. In the smaller end of town today, Immutep was up by a nice 19%. You've also got Bougainville Copper, Agosi Minerals, Base Resources and Dimerix. And in the downside in the losers today, or the laggards I should say, that's a nicer word, Next Science, 88 Energy, Lindian Resources, Synlait Milk and Chalice Mining. All right, well, of course, we're looking ahead to what will happen with the offshore session. Mark was talking through some of those really big earnings results that we're going to get in the US, but also in terms of data, UK industrial order expectations, Canada retail sales, core durable goods orders, and US crude oil inventories. Tomorrow on our market, we will not be here. The Australian and New Zealand markets will be closed for Anzac Day. But looking ahead to the Thursday session, you've got those unemployment claims again and pending home sales as well coming through in the Thursday session, and all, of course, waiting for that core PCE data, say that 3 times fast, that is going to come through on Friday. And as Mark said, a number of big earning companies as well coming through, including a lot of those energy players. But just recapping where the market is for now, a pretty flat session, but still finishing in the black, up 2 points or 1/10% there on the CBO 200. The ASX 200 finishing higher by 7 points or 1/10%. 7,690. So that's quite a nice round number, and just below that 7,700 point level as we head into a midweek break for markets. And of course, we will not be here tomorrow, but we do look forward to rejoining you from 9:40 Eastern on Friday.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.